Okay, this is Brian Stoll for Timing Strategies, Wednesday, January 9th. I'm going to make this real quick because I've been having trouble with YouTube, and so I don't want to spend too much time if it doesn't work getting this video up because it's just not working. Bottom line, we went long today on the basket using the S&P, Dow, Russell, NASDAQ. The four indices, the S&P, Dow, Russell, and NASDAQ. We're long here, 50%. Looking for a test back up into that trend line minimum. Possibly we can break that and close above that high. That'll get us up to 144 on the spiders. It's about a 2.5 to 5% move if we can get it. Our risk is the low on a closing basis below today's low, unless we get a wash that takes us down below the low of August back here at the number 1 point at 137 on the spiders, and then a close back above there, but that's got to happen in one day. It can't happen like we're seeing right now where we got a wash at that number 3 point and it's sticking around down there for more than a day or two. Next point I want to bring up real quick is the XLF. XLF, how do you like that? Anybody wants to jump on a very low risk, high probability, potentially very profitable short-term trade, you can buy that, even though the financials I think are the biggest dog, in the kennel, along with the real estate. I'll get to that real quick. If you want to get long the XLF, real easy way to do it with a little more juice, a little more mojo, would be the UYM, I think that's it. Or no, UYG, excuse me, UYG. I get these U's all mixed up. Yeah, the UYG, that's a 2 beta ETF. Using the financials. Where's the upside on this one? Well, I don't want to get, too happy, but, there's a minimum of a 10% upside up to that 20 bar average, as high as maybe a 20% return up to that 50 bar average. That could happen very quickly. And also the IYR real estate, again, I think another dog with more, like Gordon said, same dog, different fleas, or different dog, different fleas, but nonetheless, the IYR's got some upside potential minimum to it to right about the old lows that we had back in November, December, 6-7%. If you want to spice that up a little bit, use the URE, which would get you probably twice that, up to about the 15-20% move. Who knows? It could break that. It could test that. Anything can happen. But a quick 5-10% is easily to achieve as long as we get a move back up. So what we want to pay attention to on this management trade is that high and that low. The day's high and the day's low. Okay. Risk is just below the low of today. Anywhere below that point at the right time, below the high of today, is a great place to get long. The lower end of that low into today's range to get long is better, but anything above today's high is pretty much as confirmation as you're going to get, so you got to manage your risk and your size accordingly. That's it. I'm not going to do too much more because, again, we're having trouble with YouTube getting these videos up, so we'll see what happens. God bless, and to all a Happy New Year.